Hi, everyone. My name is Colton Carnevale. I am the COO here at FastGraphs. I work with the development team and everything. And yeah, I wanted to thank you guys all for attending today. We're going to be going over what FastGraphs is, who it's really targeted for, who can really take advantage of it and show some features and really show how to use the tool. At the bottom of your Zoom, you should see a little button that says Q&A. So at any point in time, you guys can type in answers or questions there. And throughout this webinar, we'll try and answer all of them. Some of them may be directly answered. Some of them may be answered through stuff that I'm already going through. So at any point in time, feel free to do that. But let's go ahead and get started. So I will share my screen and get started. So first things first, who is FastGraphs really for? Right? So FastGraphs is really built for the long-term fundamental investor. It works because it's focused on the business behind the stock and the price second, where traditionally most other websites that you're looking at for stock research, you're looking at price first. And we, like I said, focus on the fundamentals of a business first. And what I will do here in a minute is go through what we're seeing on this chart and show you how we do that. But within seconds, you can see if a stock is even worth looking into as an investment candidate. It really, really shortens your investment time that you have to sink into your research when looking at stocks. I can quickly go through a bunch of stocks and almost instantly look at them and be like, it's not really even worth my time to dive into the financials even more, or the 10Ks, the 10Qs, that type of stuff, which is all stuff that you have to do, but you can waste a lot of time without a tool like FastGraphs. FAST stands for Fundamental Analyzer Software Tools. So once again, we're really focused on the fundamentals of the business. Earnings determine market price. Where the earnings go, the stock price is going to follow. But it also represents that the fast in FastGraphs represents how fast it can speed up your research process when investing in stocks. So let's take a look at some charts. We're going to take a look at some companies, some good ones, some bad ones, to describe what I've been talking about. But first, I want to take a look at this. We're going to kind of pull apart what we're seeing on the screen and then, go from there. So I can take all of these lines off on the chart. And at first, I know it can be daunting, but once you really figure out what the lines mean, it's super easy. But I want to just start with price, which everybody's used to, right? So if you go to other websites for stock research, you're going to see price movement. That's what everybody's focused on. Should I have bought here after it dropped? Should I have bought here after it dropped? Should I have bought here after it dropped? Is this overpriced? Is this overpriced? You never really know unless you're really looking at the fundamentals of the business. And once again, that's what FastGraphs shows you. So by clicking on this fair value ratio down here, I can plot what we call the fair value ratio. And so we calculate a fair value ratio of a 15 times earnings based on the growth rate of the company. And as growth rates change, the fair value changes, and I can change shorten time frames. I can increase lengthen time frames. I can use this down here, and then notice as I'm changing time frames, this growth rate has gone up to a 16.29, which then has given me a 16.29 fair value, right? If I drag this back here and I'm looking at a 9.2, it's giving me a 15 times fair value. And what that means is we're plotting adjusted earnings per share. So you actually get a whole plethora of metrics to work with. But right now we're plotting adjusted operating earnings, adjusted EPS, each fiscal year. And what we have done is we apply this 15 times multiple to every single one of these, right? So this 8.52 that we see right here, this represents that at 8.52 times 15. This is 8.85 times 15, 11 times 15, and so on. And then what we do, because like I said, we focus on the fundamentals of the business first, we put the stock price on top of it. And as you can see, where the business goes, the stock price goes in the long run, right? This is 20 years of data that we're looking at, okay? So there's going to be short-term volatility. There's going to be times where it's not exactly on the orange line, times where it's over, times where it's under. extended periods of time where it's under, and sometimes we'll see stocks where it is over the orange line many times or for long periods. Scott Richard just asked a question. When you say fair value, is it normalized PE based on growth, EPS estimates to get fair value via multiplication? Scott, I don't necessarily understand what you're asking there, but in simplistic terms, the way that we calculate fair value is we calculate the compound annual growth rate of the time frame that we're looking at based on the metric that we're looking at. And based off of that growth rate, we use a few different formulas, which you guys can read in our learning section, in our learning center, that calculate that fair value ratio. So I hope that answers your question. We do have forecasting as well, which I will get to in a minute. So in really simplistic terms, when I'm looking at a historical chart, that's what this chart is called right here. Anytime it's under the orange line, it's undervalued. Anytime it's over the orange line, it's overvalued. Now, that doesn't mean you can't make money, right? Buying something overvalued, but what overvaluation represents is risk, right? A stock can be extremely overvalued and keep going up, especially in the short term, as people are pumping money into it, as people are super excited about that stock. But at some point, it probably will fall. You can never say it's going to fall for sure. But what you are doing is you are extending yourself and you are buying into a lot of risk. And so this little blip over here, right? This you could argue is overvalued, but that doesn't mean you can't buy it. And one thing I can do is I can left click here and then left click anywhere on the price line and see a growth rate, right? So if I were to have bought it then and then held it out till here, I would have gotten a 13.55% annualized rate of return. Okay. I would have turned $10,000 into $29,000. Now, this is where valuation really becomes important, overvalued versus undervalued. If I would have waited a few years, first of all, I would have had to have gone through about a year and a half of losses, losing 23% total or 17.64% per year before I started to see that return. But if I would have waited a few years till it was undervalued to buy this, and I'm going to choose a bottom and go till our last closing price, I would have had 21% annualized rate of return. So I would have turned $10,000 into $41,924. That's a huge difference, right? Like what was the comparison? It was $41,000 versus, oops, let me get one, versus $31,000, right? So $10,000 more dollars I made off of my investment in a year and a half less time. And that's due to buying a good valued company that is growing fast, right? So I want to take a look at a couple other companies. This is Elevance right here. This is a managed healthcare company. That's the sub industry over here. I guess before I do that, let me show a few more portions of what we're looking at over here. So we have on the side here called what we call fast facts. Okay. And if you're on a smaller screen, you may see it below. Okay. But on normal size screens, on larger screens, it's going to be to the right. But what this represents is we've got some information regarding the stock. So previous close, the blended PE, which the blended PE is something that we specifically use here at FastGraphs. It's a mix between the trailing and the forward PE. We like to use a blended PE ratio because we think it represents a more current valuation of the stock. If you use a trailing PE, then you're using historical data that's not the current earnings of the company. If you're using forecasting data, so a forward PE, forecasting data is not guaranteed to be correct. So you can be overstating or misjudging what the PE ratio is. But what we do is we take a blended average between the last actual and the nearest forecasting data point. So that would mean I'm taking a PE ratio between this 33.14 and this 37.25 estimate number, and coming up with a PE ratio, time-weighted average based off of that. Then down here, we have the graph key. So this is representing the growth rate of that orange line that we see. The fair value ratio is this 15 right here. So that is the actual what ratio this orange line is plotted at. And then we also have this thing that's called the normal PE. So the normal PE is what the market has normally traded this stock at. Okay. So I can see that this is traded normally at a 14 times multiple instead of a 15. And that's due to these many years right here of it being under the orange line. If I were to shorten this, we can see it slightly over, okay? And that's due to these time periods being slightly over. The way that we calculate that normal PE is it's the fiscal year-end PEs trimmed, the average of the fiscal year-end PEs trimmed for a high and a low. And then if it gets below 5 years, we just do we don't do any trimming. So it's just the average of the fiscal year-end PEs. But so this then gives you an idea of what the market has normally traded it at, right? Because there can be times where, based on the growth rate, we're calculating a lower PE ratio, but it may never have hit that PE ratio. So we also supply this normal PE line. So you can say, okay, over the last 20 years, this is what the stock has normally traded at. And if it's significantly over that blue line and over the orange line, I mean, you're kind of looking at a clear picture of overvaluation in that sense. So that's why we include that blue line. Then I have a few other things on here. We have two forms, like two ways that we show dividends. We show a dividend payout ratio line. Okay, so that's plotting this $1, $1.15, $1.50 at the same ratio as this. And what this represents is actually the payout ratio. So I can see that this is 17.6% payout ratio right here. That line right here is roughly 17.6%, this orange line basically. And we can see that over here a little bit better. So this company is maintaining a 16 to 17% payout ratio on their dividends. And we'll see in other companies that's going to be a lot higher. You instantly see the payout ratios with fast graphs, right? Boom, right there on the chart. We then also show the dividends as this green shaded area above the orange line to represent you as a shareholder. You're getting a participation in the earnings and then your dividends on top of that. So that's what that green shaded area represents on top of that. You can also plot a dividend yield. Okay, so as the stock price is lower, the dividend is higher. As the stock price gets higher in terms of valuation, the dividend yield gets lower. Okay, so a couple different lines that you can throw on here. You can take them off if you want, and so on. So let's take a look at a couple other companies. I want to show you guys a company that is a good low growth company. So we can see stability in earnings here, right? This orange line is not really wavy, right? Like it's growing at a solid rate. I can see the change per year down here. They had a high growth 17% this year, then 1%, 8%, 8%, a little bit of drop there post-recession. So this is the 2008 recession, the big housing recession that we had. And then this other gray shaded area represents the COVID recession. But as we can all see, this is a relatively stable but solid grower. This has only grown at 4.07% compared to that 13 to 16% that we saw with Elevance, that last company. As we can see, I can plot the stock price on top of this. And over the long run, this stock price follows where this company goes. Now there's times of overvaluation and times of undervaluation, right? So we have some undervaluation back here. We have some overvaluation up here, but it tends to always return to the mean. And this is another picture of a company that I may want to invest in. Now also take a look at the dividend payout ratio. I can instantly see that this payout ratio is higher than Elevance's, right? I can instantly see they pay more in dividends than Elevance. And they're paying around a 63, 64% payout ratio. So once again, instant looks into like what's going on with the company, potential investments, what you could be getting out of it as an investor. Let's look at a company now where it is kind of bad and no growth. And I'm going to take the stock price off. So this is a company where their earnings were good back through 2009, and now they've started losing money all throughout these years. And to no surprise, the stock price has dropped that whole time, right? So I can instantly see this is not a company I would want to invest in. There's a difference in stock price drops. This stock price drop is driven completely by the fundamentals of the company deteriorating. And I can instantly see that. There's no question about it. There's no research I have to do. I'm visually seeing all this so fast. And that's what makes fast graphs really, really powerful. Another company that we can look at, this is just another ugly company. We're going to see cyclicality in earnings. Okay. And what does everybody think the stock price is going to do when I plot? It basically follows it. This company has gone nowhere. They had this boom in earnings up till 2008, and then we saw a huge crash in the stock price, and it stayed relatively flat since. This is dead money. This is a decade or more of just dead money that fast graphs can help you avoid, right? Like we all want to make money. We all want to make safer investments, and fast graphs is really here to help you make safer investment decisions. One more company I want to show you guys is SMG, and we can see that there's some cyclicality in this company. We had some drops down here, a bit back up, a boom back in earnings here, and then a collapse in earnings. And what's stock price do? It follows it, right? We aren't making this fit. We are purely calculating what we think is a fair value ratio based on the growth rate. And it is undeniable that the stock price follows where those earnings go. Okay. Cyclical companies, you'll see cyclical stock prices. You want to see another cyclical company? Caterpillar is one, for example. Here's cyclicality. I can instantly see that this company is a cyclical company just off the earnings. What's the stock price do? It follows it. I mean, it almost follows it to a T, right? There is disconnects. There's always going to be disconnects, short-term disconnects. But in the long run, we can see that. Let's see, someone asked, where can I see free cash flow for covering the dividend? There's actually two spots that you can see that. So in the list of metrics that we have free cash flow, we have operating cash flow, sales, EBIT. So if I just click this, we're looking at free cash flow. Here's a point where free cash flow hasn't covered the dividend. Here's another point, but all throughout these years, they cover it. We can also go to the fiscal fitness, which this is a section that gives you some pre-built charts, operating cash flow growth, share buybacks, operating cash flow greater than net income. And I can see on here that free cash flow for the most part is covering the dividends. Someone just asked, FastGraphs is end of day data. What time does it update? So we update as soon as we get data from our data provider. We do actually offer international stocks. So with the base plan, we offer US and Canadian stocks, which is roughly covering 20,000 equities. And then if you were to buy the international data plan, that jumps it to about 80 to 90,000. For US stocks, I would say roughly by 5 p.m. Eastern Standard Time, we have loaded in most of the unofficial pricing, and then we get the total, like complete official pricing sometime by midnight. And what that means, unofficial means, is that it can change. They're making sure, I guess, that that data is correct, but most of the times it's not going to change. But unofficial pricing comes in relatively quick. And then as for fundamental data, we get fundamental data, we get new estimates all throughout the day. So we're constantly loading data whenever we get data from our data provider. Whenever they upload data to their system is when we pull it. So it's intermittently, it's throughout the day. But yeah, so end of day stock price data does come relatively fast into the system. Okay, so we've covered a few companies, good ones, bad ones, how fast you can really view what these companies look like with fast graphs, right? Well, one thing that I want to cover now is the metrics that you can look at, right? So I can look at, for all of these companies, I can look at tons of different metrics, plotting all of these, EBITDA, EBIT, sales, right? These are all available for use for valuation purposes. Some companies are going to look better on some metrics and some companies than other companies. Like if I go to Amazon, for example, and we're looking at adjusted operating earnings, we see this massive disconnect. I can take this off and I can say, okay, well, that's never tracked operating earnings, right? But if I go to operating cash flow, this company tracks operating cash flow to a T. So as an example, Colton Carnevale, the CEO of FastGraphs, he always says this is a tool to think with. So we give you the things, the data to look at, and you can kind of put together pictures of valuation by using all of these metrics. A major question that we get is, what is the best metric to use? And this isn't us being snarky or anything. Our best answer is use all of them, right? I mean, it's so fast. I can just click through all of these really fast and see different pictures of the company. I wouldn't necessarily go through them this fast. I'd take a little bit of time and take a look at, like, Amazon sales are really smooth, right? That's instant data I see right there. Boom. Really smooth, fast growing sales. That's a great thing to see in a company. Generates a ton of operating cash flow. Boom, right there. Already that fast. And once again, that's what's so powerful about fast graphs. We do have this one thing right here called a smart metric. So as I look at different companies, notice that it keeps defaulting to adjusted operating earnings, even though I was on operating cash flow. And then if I were to look at a company like a REIT, it's actually going to default to adjusted funds from operations. Now, if I were to click this off and change it to EBITDA, for example, I can now search for other companies and it's going to stay on EBITDA. But this smart metric just kind of helps speed up the investment process there. Okay, now that we've kind of gone through the historical chart and all of this, I want to take a look at some of the other functions that we have available on the tool. We have this chart, this section called the performance section. And what this allows you to do is compare stocks, the growth rate of stocks, all of that, to up to 3 comparison tickers. Right now, I have it being compared to the SPY. I'm going to get into what these charts are in a second. I can see down here that these are my performance results. If I were to invested $10,000 into Johnson & Johnson, this would have been my starting price, my ending price, how much I invested, my beginning shares, ending shares. And then I get a performance result down here comparing the 2 investments. So over that same time frame, the amount of dividends, the growth, like the capital growth. So my annualized growth without dividends total, and then total annualized rate of return. I also get some dividend performance stuff down here. So I can see that on average, Johnson & Johnson grows their dividend faster than the SPY, and then compounded average growth rate, they're growing it much faster than SPY. Then I can also come down here, I can see all of the dividends being paid out for Johnson & Johnson. I can quickly go in between summary and detail. I can also put newest and oldest, swapping those things. Now, back to this chart, I want to choose a different company. I want to go back to Elevance. By the way, you can click up here, you can left click, or I'm clicking the /, the thing just below the question mark on my keyboard. And that also lets me open this up and type up here without taking my hands off the keyboard. But I want to take a look at Elevance and show you guys what this chart is really showing us. So once again, Fast Graphs focuses on fundamentals first. Earnings determine market price. The fundamentals of the company are going to ultimately determine the return of the investment in the long run. Okay. So what we do is on this performance chart, we're not just focusing on price. We focus on price and then also the change, the cumulative change of the metric that we're looking at. So if I was looking at operating cash flow, notice this has also changed to operating cash flow for both Elevance and the SPY. But I'm going to go back to adjusted EPS for this case. Now, what we do is we show the cumulative change of the SPY versus Elevance from a EPS standpoint and a price standpoint. So I can see, if I take these apart, that Elevance has significantly outperformed the SPY in terms of return, right? You can also hit this and change this to compound annual growth rate. So I'm looking at a 13.64% compound annual growth rate versus an 8.03. Huge difference, right? And why? Well, if I plot the earnings of both of these, I can see that the earnings of Elevance has significantly outperformed the earnings of the SPY, the growth rate, right? And it's stable, it's growing super stable. And there's no question really at this point as to why Elevance has grown more. It's because the company has grown faster than the SPY has. So that stock price has reflected it. This chart down here then is also comparing valuation in conjunction with this price change, because price change is a form of a few things, right? If it were to go from undervalued to overvalued, it's going to have a compounded effect on that price change, whether just like if it goes from overvalued to undervalued, it's going to have a dampening effect on that price change. So what we plot is the fair value ratio, which is the flat dotted lines right here, right? So I have 2 fair value ratios, which based on the growth rates of the earnings, the SPY and Elevance both have the same one. And then I'm plotting the PEs here as well. Okay, so we can see a massive uptick in PE ratio for the SPY, while Elevance has also seen that, right, during this time frame, but it went from undervalued to roughly fairly valued, while the SPY has basically gone massively overvalued. And then we saw a big drop, whereas we've seen Elevance down here kind of maintaining around its fair value. And once again, we can see that right here, right? So we can see that it's rotating around its fair value line. We can take a look at a company like Cisco. Okay. So this is a perfect example of why you need to also compare valuation at the same time. If we take a look at the Cisco price and the SPY price, SPY has outperformed Cisco. But if I look at the EPS growth of this, Cisco has significantly outperformed the SPY EPS growth, 7.28 versus 10%, right? But why has Cisco underperformed then? Why has it underperformed the SPY? Why has it not followed that earnings growth? Well, it's because Cisco was significantly overvalued back here in 2003, and it's now come down in 2023 and 2024 back to fair value, okay? We can see that on the historical chart. We can see this massive overvaluation, okay? Even though this company was growing extremely fast at this point in time, 23% a year, if you were to invest in this company over this time frame, you would have made 3.22% per year. Why? Because of overvaluation, okay? So valuation is super, super important, and this performance tool helps you understand what is also causing that performance to be affected positively or negatively. The next thing that I want to take a look at is the forecasting tool. I'm going to go back to Elevance. This is kind of where you can really see how much money you can make in an investment, right? So this is the kind of the important part. The historical chart, the performance chart, these are historical stuff that lets you see how the stock has performed, but you can only invest in the future. You can't invest in the past. And yes, historical performance does not guarantee future performance. But what it does is let you see how well managed a company is and stay away from cyclicals, things like that. Like I'm confident in a company like Elevance more than I am confident in a company like Caterpillar or US Steel, for example, or Ford, right? So now we can take that information that we have and take it to the forecasting tool. And what the forecasting tool allows us to do is we show forecasts of the company, all sourced from analysts. We show the median estimate for each one of these years. Some companies are going to have more analysts, some companies are going to have less, and then some companies might not have any analysts or in any estimates. That's just kind of the nature of the game with big data, unfortunately. But what this does is we then plot what these estimates are going to be, and then just like on the historical chart, we derive a fair value formula based on that growth rate. And I can plot over every single one of these lines, right? And see what potential returns would be if it were to go to these certain points, right? So Elevance, we are expecting roughly a 13.47% rate of return, annualized rate of return. Okay. So that's a total 35.82% return by 2026. In conjunction with that, I have this thing called the analyst scorecard. And what we do is we actually rate how accurate the analysts have been in the past to give you more confidence in how in those analysts going forwards. And what we do for this is we hold them 1 year in advance and 2 years in advance. So this estimate for 2014, for example, they estimated $8.36 for 2014 fiscal year EPS. Well, that was made a year prior, back in 2013. We then give them a 10% margin of error. So this was a 5% difference. So we give it a hit, right? Whereas this is a 23% difference. So it was a beat. And then the analysts have never missed, essentially. So I can be really, really, really confident in these analysts. We do the same thing, but at 2 years. So this 2014 was actually made in 2012. They're expecting 810 and it got 885. And we give the 2 year a 20% margin of error. But that gives me a ton of confidence into what this company can do and what these analysts can do for this company. We can then also look at some previous estimates, some current estimates. These ones aren't changing a lot, so we're not seeing a big change. But there's some companies where, like UNFI, they can go through really big changes, and this is due to a huge valuation at this point. We're looking at 298 right here. So that's why this graph is kind of blown out. But as I can see, I can change some of these, and we're getting different estimates down here that are the analysts are providing. I use this company as a big stark difference. I would probably avoid this company if I were you guys. But going back to Elevance, I can run all these calculations, right? I can then take the normal multiple, hit this drop down, and I can take what historical normal multiples have been for this company. I can choose one of these low ones and make sure, as a conservative estimate, okay, I'm going to be returning maybe 8% per year. Okay, so that's still a great investment on a conservative side, and so on. So this gives me more detail, more information. This lets me take historical norms now of how this company has traded, and lets me run investment analysis opportunities on what I could be earning on this investment. We also have a long-term growth estimate. This is a single estimate provided by a data provider, so they're expecting 12% long-term growth. Once again, you can run your mouse over all of these. Okay. We also have a historical compound annual growth. Notice that this defaults to the 5-year. So does the normal multiple. This defaults to the 5-year, but you can change them to whatever year you want. So I can plot this 20% historical growth. I mean, this 13.5% historical growth rate for the 20 years. I can plot that. And that now changes the estimate on here. That will change what fair value multiple we are plotting based on the growth rate. And I can see that this company has grown solid. And I can use these historical norms to see what potential investment returns would be in the future. Okay. So and I'm sorry, there is the custom tool. This allows you to input whatever data you want, basically. I'm just going to show a huge difference. If I wanted to say, if I expected they're going to make $60 in earnings per share in 2025, I can plot that. I can enter custom growth rates. If I thought they're going to grow 30% per year, right, I can plot that. So the custom chart just lets you put in custom data, run your own analysis, basically, if you've come up with certain assumptions and numbers on your own. The analyst scorecard, we've covered that. This research report, this is a beta. Not all companies are going to have research reports, but we do have some available. Fund graphs is another very important feature. Fund stands for fundamental underlying numbers. This just lets you plot a bunch of data for this company from the financial statements. So just a big data plotter, lets you kind of run some more analysis on your own. We have per share, we have in millions data. So notice that this is sales revenue in millions. If I go to per share, this is now going to show me sales per share. Okay, like I can come here, I can see the shares outstanding as well. That's being blown out by the sales. So shares outstanding is dropping, and that would affect how sales per share is growing, right? So I would see a larger growth in sales back here during that steeper drop of dilution coming out, basically, where they're taking shares out of the market and increasing shareholder value through share buybacks. So that's a really important thing to look back and forth between the per share numbers and the in millions number to see how much financial manipulation is happening, right? Like a company can really boost up their per share values by buying back a ton of shares. That would kind of show manipulation in some numbers versus if their actual in million sales have flatlined. We also have ratios. So in here, you can look at liquidity ratios. So current ratio, quick ratio. We've got some profitability ratios, and then we've got a ton of valuation ratios to also plot on here. Some of these companies, healthcare companies, don't have EBIT and EBITDA, so that's what we're seeing there. But now I'm plotting PE ratios right here. I have a bunch of functions around here. You guys can feel free to play around with these. They're pretty straightforward. Logarithmic versus arithmetic, lines versus bars, things like that, just to make it an easier viewing experience for you guys. We then also show financial statements for these companies, and the financial statements that we offer are pretty powerful, the functions that they have. So It's just a basic financial statement. There's nothing fancy here, right? But I can then plot this by clicking these charts here. And I get compound annual growth numbers and total growth numbers here. So huge growth in sales in this company. I can then shorten this and this growth rate changes. Okay, so this is reactive, showing you that data. I can show it yearly. I can show it in quarters. So now I'm looking at quarterly data. I can also look at full. So what full is notice that we show the fiscal years as well as the quarters themselves in between. This doesn't have a plottable value just because it wouldn't make any sense. I can also click up here and go directly to the 10Q if I wanted to. I can go to the 10K if I wanted to. So that's all super simple. Looks like the SEC's loading time's taking a little bit. Don't know what's going on their end. But yeah, so I can go to their financials really fast from there. Let's see, has that loaded yet? Nope. I can look at period over period growth. I can look at absolute growth. I can look at it as a percent of revenue. So this is basically looking at it like margins in that sense. I can look at the growth period over period growth here. I can reorder it, and then I can do some adjustments if I need to for splits, fully adjusted and whatnot. Balance sheet, same thing, period over period growth. This one is as a percent of assets or as a percent of liabilities. So all of these numbers are, this cash only is the cash divided by the total assets, whereas liabilities is divided by the total liabilities and stockholders' equity. So it just gives you a better representation of the percent values on these financial statements. And then finally, we have a cash flow statement. This only has absolute and period over period growth, but lets you look at cash flow statements really easily. And yeah, same functions over here. We have a few other tools in the system. We have portfolios as well as screening tools. So let's take a look at portfolios first. You can create tons of portfolios, and we have a bunch of features that actually function with that company app. So that we were just in what we call the company app. We're now in the portfolio app. So I can go in here. I can actually plot buys and sells in here. So notice that I have holdings data. I can plot transactions of this. And then we offer as a basic portfolio. That's what this one is. It's actually a simple portfolio is what it's called. We have 5 advanced portfolios allowed for our premium users. But basic allows me to still plot transactions. And then if I were to click on one of these, notice that this has now added this thing up here where it tells me the portfolio and then the tickers, right? And then now I've plotted all of my buys and sells on here, buys being green, sells being red with an average cost. And then now I'm going to use the arrow keys on my keyboard, and I'm using the right arrow, and I can quickly go through this portfolio, and I'm plotting all the buys and all the sells of this portfolio right here. So that's an awesome feature. I can click in here and change this. I can plot. We've got some premium portfolios. We actually have screens that you can also plot, which I'll get into here in a minute. But going back to the portfolios, if I take a look at a advanced portfolio, I get quite a bit more data, right? So I'm getting the top gainers, the top losers, the top traded. I'm also getting some information right here. So net investment, the XIRR on the equity, the total equity return of this portfolio, the amount of income I've actually earned on this portfolio, and the current yield. And then this is giving me a date range for all of this data. I can also toggle between showing open positions and all of the positions I've ever had in a portfolio. I personally just do the open positions in my portfolio because obviously those are the stocks that I'm following. But if you want more accurate tracking data, then you should put in all of your buys and sells of your portfolio, not just your open positions. But this gives me a quick summary look at my day change of my portfolio. So I can see Foot Locker and AMG and these stocks right here, they've all had good gains over as of the last close. Whereas Southwest, Delta, UNFI, these companies right here, we've seen some losses, and then we've got volume over here. We then also have an event feed, so you can see CCK. This was the latest 10Q that was released. That was actually released yesterday. And then we have a portfolio growth chart. So this is showing the net investment versus the value of the portfolio. And this is actually auditable. So if I click on net investment, I can see the deposits and withdrawals of this portfolio equals the net investment. And then as of right now, we assume that each buy is a deposit while each sell and dividend is a withdrawal. So it's showing you this portfolio had $79,000 worth of buys based off of the sells and the income that was made off of it. It's got $13,000 in withdrawals. And then now my gain is basically from the 65,000 to the 81,000 that exists right here. If I scroll down here, I can see some asset allocation and sector diversification. So I've got it broken down between mid cap, large cap, small cap, and other. And then same thing with sectors. So this is showing it as sectors. So just giving me a bunch of diversification information on this. And then we are working on a cash feature and actually are working on a broker connected feature, which is in beta. We've actually released it to a small amount of subscribers right now, and we're fully testing that out. But what that does is it would allow you to connect your brokerage firms directly to FastGraphs, which would get a snapshot of, and it would look like this. It would be an advanced portfolio, but it would get any new trades that you have. By the end of the day, it syncs up with that, and then your positions, everything. So it just automates it, so you don't have to manually put in all of your transactions. Getting back to this, down here, I have a really interesting chart. This lets me see the estimated growth rate, and this is the growth rate of the SMART metric that we have. So going back to what we talked about at the very beginning of this is the estimated growth rate of the SMART metric, not of the stock, not of the investment itself, but of the SMART metric, and then the dividend yield. Okay, so then what it shows me is my kind of average of what my estimated like earnings growth rate of my portfolio is going to be, as well as the dividend yield. And it's all based on weightings and everything like that. So this kind of gives me an interesting look into how my portfolio is set up for future growth. Then we also have a weighting chart down here. This one's pretty straightforward. Under holdings, I have a bunch of data here. By the way, you'll see all these symbols in these tables when you see stocks, and these are what we call snapshots. So at any point in time, I can click this and a drawer pops out from the right side, and it just kind of gives me a quick snapshot of what that stock looks like. And at any point in time, I can click these and it will draw it. Even from the snapshot, I can hit open section and go to any of these I want. So if I wanted to go to the forecasting section of CCK, I can do that straight from that snapshot. It opens it up in a new tab, so you don't lose your old tab. The holdings tab, I mean, this is just like a general thing that you'd see on your brokerage firm. Shows you weighting, market value. Ignore these two things over here. This is just some debugging stuff that we've had. And then, yeah, just general stuff that you'd be used to seeing. From here, I can look at transactions. That's acting slow right now, but yeah, here we go. I can see all the transactions from right here really fast. And by the way, if I were to plot one of these, I can quickly see transactions from within the company section as well. So this lets me look at the transactions in this specific portfolio. I can add transactions manually if I want. And yeah, the other thing you can do from here is add and remove from portfolios. So as you're going through a bunch of stocks, you might find a research candidate by clicking through some things. Maybe you're clicking through one of our preset portfolios and you say, wow, that stock looks really interesting. I can quickly come here and hit add to portfolio. And maybe I have a watch list portfolio. So we can go ahead and do that. We can create a quick watch list portfolio. I'm just going to make it a simple one. I'm going to hit create manually. I'm going to call it watch list. I'm going to keep it in USD. And then there's no stocks in here. I could add Johnson & Johnson if I wanted to, and LKQ maybe. And oops, remove Johnson & Johnson on accident. Let me add the two of these. So now I have those two in there, right? Now I'll get back to that, adding to that watch list. We have these preset portfolios, so I can go through, I could go into this and see the S&P 500. I could actually graph it from here by clicking that button. And now I can scroll through this and I could be like, oh, maybe Apple or AbbVie or one of these stocks, maybe I want to add this stock to my watch list. So I'd just go here and I could add it to the watch list. I could actually add it to these other ones too if I want, but hit save changes. it's now in that watch list portfolio. But yeah, back to this, we have a bunch of preset portfolios for you guys to go through and potentially find new investment candidates. Also, one other thing that I want to get to or show you guys is views. So you can create unlimited views that allow you to see certain data items, right? So this is an income and price returns view for this portfolio. So I'm looking at all these price returns and a dividend yield. I can edit this view and I could add GIC sector if I wanted to. If I were to hit update, it would update it across all the portfolios that have this view, or I could save this as a new view plus GICs is what I could call it. And I could save this as a new view. And now I've got these two. And then now if I were to go to another portfolio, I could then add an existing view and refresh my page. I could add an existing view and there's that GICS one. So now I have that on two portfolios. Also notice that I have this view manager where I can see all the views that I have. I can edit this view from here. I can also manage what portfolios this view is on, all from here. So it's just an easy spot to handle all of that. All of this, there's a lot of data to go through on here. I definitely recommend you guys going to the YouTube channel and taking a look at the screening webinar that we did. I think it was last week, maybe 2 weeks ago, but it basically goes through a lot of this data. The views and the screener have the same data items in the same format. So definitely recommend you guys going through that. Also reach out to us at any point in time. We have this thing down here called Intercom, and any point in time, you guys can drop us a message and we're here to help. You have a question on something, maybe you have a question on how to build a screener in a specific way or what something means, just drop us a question. We're here to help any point in time. The last thing I want to show you guys is the screening tool. So it can be very daunting, but I promise it's not too bad. I definitely recommend you guys to go look at that screening webinar. We did a whole hour long on the screener. And yeah, I'm not going to go into it detail from here, but basically, I mean, I can search for certain stocks, right? I can look for stocks in the consumer staples with, we're going to do long-term debt to capital, less than 50. I can do market cap, 20 billion or more. And let's do price return greater than 5%. I don't know if this is going to give me anything. No, it didn't. Positive price returns. Let's look at that. There's 19. Okay. So there's a lot that you can do with this, right? Screens the whole database that we have, super powerful screener. And we're actually in the process of redeveloping this screener to give you more powerful features in the future, like being able to compare, have it say, I want the current PE ratio to be less than the 5-year normal PE ratio. Some super powerful features coming out in the future. And then finally, the last thing that we have is the preset screens. So we offer a bunch of preset screens for you guys to also find new stocks, new investments. And I can click on any of these. Here's the S&P 500 with growth greater than 10%. It's brought it down to 34 stocks. And this can change every day. As data changes, it could, FMC could leave this. And I can go through here and look at it on a snapshot, or if I click this, it has now loaded that screen into here. And then now I can just quickly go through all of this, right? And I can find, boom, Cummins. Maybe this is something I want on my watch list. So then I go here, click add to watch list, and there you go. So that kind of sums up everything. We've got a couple questions on here that I want to answer because we have a few minutes, but other than that, that kind of sums up everything for Fast Graphs. We definitely recommend you guys taking a look at the YouTube channel. Like I said, reaching out to us. We have a learning center, by the way. If you click this up here and click Learning Center, there is a ton of information in here, a ton of articles to read through. And yeah, go through this to learn certain things about portfolios, about the company section, all of that. But let's see. Oh, Keith, that actually, I think, answers your question. So yes, we do have training videos. There's demo videos in here. There's tutorials. There's written articles. The whole YouTube channel is basically a demo video. So like I said, I recommend checking that out, going there. Hector Martinez just asked about ETFs. So that is one of our biggest requested items. We don't have ETFs yet, but we're going to work on getting those in. And we actually have 2 ETFs. We have the SPY and the IWV, but those are the only 2 that we have right now. But we're going to work on making this better. But we visualize we will visualize ETFs better than anybody. No one will visualize it like a company like this, where we actually have a earnings line and everything for this to actually represent valuation and whatnot. But yeah, ETFs are coming in the future. They are just not here yet. Cool. Well, that's kind of it. Looks like that's it for some questions. Scott, you asked about cost, things like that. And yeah, I mean, I'm not going to necessarily go through stocks right now. We don't really have the time for that. But yeah, we may have some stuff on the YouTube channel regarding costs. So make sure you check that out. Jay, we do not have an iPhone app right now. No, we have fully focused on the web, but we are working on improving our mobile experience on the web. And then we do want to eventually build an actual iPhone and Android app in the future. Cool. Well, guys, I really appreciate everybody joining, taking the time out of your day. And yeah, we really appreciate it. And for everybody that joined this webinar, we actually have some coupons that we're going to be sending out to you guys. So make sure you guys check your emails over the next few days and whatnot. And you may get a coupon for a discount for signing up and for joining the webinar. So I appreciate it, guys. That's it for now. Like I said, feel free to contact us at any point in time. We're happy to help. Hope everybody has a great day. Bye, guys.